Hello, this is Les Goldstein, President of Personal Financial Strategies Incorporated, with our September 2014 monthly video. In this month's video, we'll be discussing a couple of the economic events that occurred last month and provide some insight into what they mean for you as an investor. Please stay tuned at the end for a required disclosure statement. September was a solid month for the U.S. economy. The labor market continued to improve, and the latest second quarter gross domestic product estimate showed that the economy grew 4.6% in the second 3 months of the year. Most importantly, the growth was across multiple sectors, which is a very positive sign for the remainder of 2014. With the economy on a firmer footing, analysts are paying very close attention to the Federal Reserve. The Fed held an open market committee meeting in the middle of September. After reading the economic tea leaves, the Fed voted to maintain the pace of its monthly tapering and drop its monthly bond purchases to $15 billion. This meeting was pivotal because it was the second to last meeting before the scheduled end of the Fed's historic quantitative easing program. By voting to maintain the taper, the Fed boosted confidence that the U.S. economy is doing well enough to take off the training wheels. The next move is interest rates, and the question on everyone's mind is, how long until the Fed raises rates? Speeches by several of the open market committee members show that there are different opinions on the subject. Some officials want the Fed to raise rates as early as spring 2015, which is earlier than most analysts had predicted. On the other hand, several other officials believe that the Fed should be extremely cautious and raise rates only when the Fed is certain that the economy has achieved enough momentum. These folks seem to favor leaving rates low until early 2016. Such disagreements are healthy, because there is a lot of room for interpretation of economic data and debate about the effects of economic policy. However, these splits mean that Fed Chairwoman Janet Yellen must craft a careful compromise or risk a public break that could cause additional volatility in financial markets. Why do interest rates and changes matter to investors? The Fed has held interest rates at rock bottom levels in order to encourage lending and boost the economy. Now that the economy is improving, the Fed will need to slowly raise rates to avoid high levels of inflation, which negatively affect the economy by chipping away at buying power. If the Fed raises rates too soon, the economy could falter. If rates are left too low for too long, inflation could spike, causing the economy to overheat. To bond investors, rising interest rates will affect the market prices of the bonds in their portfolios. As interest rates rise, bond prices fall as new bonds paying higher rates come to the market. As financial professionals, we spend a lot of time managing these issues for our clients so that they are prepared for rising rates. The bottom line is, we know higher interest rates are coming, we just don't know when. The good news is that the economy is doing moderately well, and the signs favor continued growth this year. Looking ahead, investors will be turning their attention to the release of third quarter economic data and corporate earnings data to see how the quarter stacked up. We're also approaching midterm elections, which can often exert some pressure on markets as investors weigh how certain results may affect government policies. That's it for the September 2014 monthly video and economic update. If you have any questions or concerns, please call our office at 847-268-3670. That's 847-268-3670, and ask for Les Goldstein, Robert Hart, or Yvonne Haverland. Once again, this is Les Goldstein of Personal Financial Strategies Incorporated, located in beautiful Park Ridge, Illinois, signing off for the month of September 2014. If you have any questions about what you heard in this update, or you'd like to discuss your personal financial situation, please feel free to call us at 847-268-3670. 3670, and I'm at extension 100. We'd be happy to speak with you. Now for our required disclosure. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or a solicitation for any purchase or sale of any investment security. The economic forecasts set forth herein may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. Please consult your financial professional, hopefully us, before making any investment decision. That's it for the month of September 2014. Look forward to speaking with you soon. Thank you.